Good morning. Good morning. Good morning. Another snowy day here in Utah. I thought I was done shoveling, but there's now a couple inches waiting out there for me. Good morning, Bob. Good morning, all. I'm going to give it just a second here. Make sure that we have audio for everybody. Sunny and 21. All right. Looks like we've got everybody. So, officially, good morning. Welcome out to the Market Watch Group midweek check in. I am Scott. I will be your host. We had a great conversation yesterday, last night on risk management, uh, in the trading foundations. So, certainly, if you missed it, make sure that you go back and watch that one because I think you'll appreciate that. Good morning, Perry. -6, Fred says, coldest ever. My wife said that at one point we were colder than the Antarctic last week, or maybe it was this week. Colder than Antarctica. Okay, here's the disclaimers as always. Here's the agenda as always. Opening analysis. Where are we at? Where are we at relative to our posture? And you'll notice if you haven't looked yet, futures are down today. Why? The same reason. Uh, Adapting expectations to a more realistic perspective of what dovish dovish Fed looks like, accommodative, right? Remember, we said UBS was talking about 2.75%. The Bank of over in England, and that's where some of this bad news actually came from, because they had an uptick in inflation unexpectedly. And we had a strong sales report that indicated uh, additional resilience on behalf of the U.S. consumer. These both indicate a greater tendency towards, and we'll probably see that when we go look at the Fed watch, right? When we look at the Fed watch. So we'll look at the opening analysis. We'll revisit the posture. We're only 2 days in. We know that. 1 day in, really. But this is still our midweek check-in. Mindset for open trades. I have to imagine, and let me know if not, that your bullish trades are cleaned out. You've managed them. They're done. You've taken profits and moved on. If not, maybe it's because it's a longer term position, and if that's the case, okay. Um, if you're hedging, the hedge will continue to look good today, or if you even did one a bit speculatively. If not, if you're just in cash, you're looking at this from a spectator's perspective, which is fine. This is fine. We don't have a problem with this. Uh, this, as long as it's, somewhat contained in its enthusiasm. We don't want an enthusiastic seller's push. As long as it's somewhat contained, we'll have opportunities developing. So great. And that's what we'll look for is we'll look at our watch list, we'll explore setups, and we'll continue talking about the this week's trading plan section. All right. All right, all right, all right. can get my mouse working. So the futures down, and increasingly so. You can see that the S&P is down 0.64, the Dow 0.5, the Nasdaq 0.8, the Russell 1.5. The more we see the Russell selling off and not able to hold support, the more we're wondering, is the enthusiasm for small caps waning? Well, yes. We know that a lower interest rate environment is most conducive to small cap growth. So if the market is getting less inclined to think that we're getting those lower interest rates, then of course small caps are going to lose a little bit of their shine in that circumstance, right? What else is happening? And then you can see that's what we're seeing in the news. December retail sales beat, which ends up showing again a resilience, the indomitable U.S. consumer. And now we're talking about a pushback on rate cuts, rate cut reality check. Oh, and then we throw this little gem in. Senate is working to avert another shutdown. Anytime we have the threat of shutdown, anytime we have a threat of shutdown, there is concern that they're not going to get it done in time. And then there's always concern of the dog and pony show that they like to put on as they get nearer to the deadlines. Okay. Anything else in the news? Anything you know of that I'm missing? You can see that the Fed won't be rushed to cut rates again. We've said that in here that we're not sure if that is warranted, what they're pricing in, but we're letting it go to see. That's about it for the news. Let's look at the economic calendar. And you can see what we got was the sales report came back stronger than expected. We'll get the Bayes book later today, where we may get additional insight into what the Fed is doing. Tomorrow, we have our normal jobless claims. Friday, some consumer sentiment. Not much left. We knew it was today. Today was the big day. Okay. Let's see quickly the Fed watch. We'll go. Actually, let's look at the futures. We have a little bit of time here. This is what we saw yesterday. Our posture had already dropped. We had already looked at on Thursday and Friday the indication of the market hitting some resistance, our stochastics being overbought, rolling over. Then yesterday we got the first signs. Now it was just a doji, and it was just and it did cross. No volume, average volume, but we had a doji. Now what? Well, now we think that there's going to be a pullback in this situation. If you're still managing bullish trades, your hedge is probably going to help you out. We're going to open, as of now, we're set to open right around here. So this is coming down. This is our prior low. So do we open here and spend a day or two and then start moving the other way? Great. Right? That would be very nice if we saw that happen, and our posture would maintain. If this thing gets all the way back down to this level or even through this level, that's going to change quite a bit. Right? So this week is important for us as we really try to glean what's going on in the market. So we watch very, very closely, right? We watch very, very closely. Okay, let me know your thoughts, but let's go look at the futures. It's a little quiet. Are you in trades? Are you waiting for trades? Are you managing trades? Did you book some gains from last week's bullishness? It wasn't a huge move, but it was definitely a there was potential for profit. So hopefully you booked some bullish gains on this first bullish week. Fred says cash. Cash is a beautiful position sometimes, right? A beautiful, beautiful position. Okay. I'm going to go into the ES and just kind of see how we're trending on the short term coming into. So there you can see that's what the futures look like. And it's pulling back, but it's still not any kind of panic mode. Some positions that got away from you, but they're mid-February, so there's a little bit of time to potentially recover. Got it. Okay, so there's our open. And it looks like we're trying to stabilize to some extent, right? Trying to stabilize here. And we'll get a sense, but let's actually switch back over to the SPY. Yeah, so and you can see here if I drop out 471. Okay. We're still above the 50. We're still a 5.25 market posture. But like I said, we need to see the stability now. If we have a couple of small days of selling and it doesn't retrace back to this point, then yeah, I'm definitely bullish and I'm definitely looking for bullish trades. If these selling days accelerate and we get all the way down to this level, or even through this level, it's a little more concerning. But you'll notice we could get through this high, still remain above the 50. So we're gonna just kind of get a sense of it. We know that the second half of January has consolidative tendencies from a cyclical standpoint, meaning the second half of January tends to be a sideways month. The questions we have is, are we just dialing back what are like we're not really expecting to turn bearish here, is what I'm saying, because all we're saying is that the Fed's not going to cut 6 times. They're only going to cut 4 times. Well, it's still a decreasing interest rate environment with strong economic fundamentals. That's still, is it the absolute optimal conditions? No. Is it still very good trading conditions? Yeah, likely so. Let's go look at that Fed number for just a second. There. Obviously, there hasn't been, nor will there be, any expectations for a cut in the January. But when we go to March, you'll notice what's just happened. We were literally at 2.5 to 1 yesterday morning, right? And now where are we? Now we're back to not even 1.5 to 1, right? It's not even odds. It's still more favoring a cut than not, but much different. This is a little bit more tepid in its expectations. So better than 50-50, but not by much, that we do get a 1/4 point cut in Q1. When we go to May, Now you'll see that it's 10-1 that we get at least a quarter of a point. So we are definitely expecting that cut to come by May. And it's 50-50 that we could get a second cut if we got the first cut. Okay. This looks a little bit more reasonable, right? So, okay. Market's down a little bit. They're pricing in a little bit more reality. We still haven't had anything fundamentally shift. Okay. Okay. We technically, well, let's see. No, there won't be new volume. At least we haven't seen it as of yet. We'll see what today brings. But as of right now, with what I'm seeing, my thought process would be still looking for new bullish trades, right? Looking on the watch list. The watch list only had what do we have? The short list had about 1, 2, 3, 4, 5, 6, 7, about 9. My expectation is that we'll see that number grow at this point. Russell's still going down. Yeah. The Russell's going to feel those expectations more than anybody else. Agilent Technologies, this is a new healthcare stock that we're watching. I still want a little bit more. Price action confirmation. I don't think we would have a Heiken Ashi yet, but it would be setting up. Yeah, give me just one, like, let's start this thing off candle, and then I would feel more comfortable looking to trade into something like that. Apple, and this is why you can see that it maybe could try to hold this old low, but at this point for me, I see the consolidation. I can now connect these dots right here and say that's my consolidation line. So from this point, what do I need it to do? I need it to break through and ideally even take out this level. Then on the pullback on a higher low, that's it. That's the reversal that I'm looking for. That right there. Doesn't always come. If you notice, it broke out, but it never really pulled back. That's tough sometimes. There's nothing you can do. It looks great. You're just waiting for the next time that you have the ability to trade it. Yeah. So we'll see. We certainly need Apple for the market to be as bullish as it can be. That's a fact. AIG, very close. The stochastics is turning almost and engulfing. Yeah, that's very close and setting up. AMD got just an extra little bump. I got no piece of that. Congratulations if you did. It was a good trade without it, but boy, it sure got a little extra. Now, if it pulls back, there may still be time if it flags and moves again. But right now, overbought, waiting for a consolidation. Amgen looks bullish. It's another new healthcare stock. Holding support, just waiting for the turn. Plenty of time before earnings. Amazon pulling back. So that was one that we had talked about. Made a nice move up. Now it's on consolidation. This looks fantastic for a setup. Right? This looks absolutely fantastic for a setup. So let's see. What have we had? We've had Agilent. We've had AIG. We've had AMGN. AMZN. Yeah, I mean, honestly, this is if all I did was say, hey, look at this, what do you think? You'd be like, yeah, this looks like it's setting up. AXP, yeah, still viable. It needs to turn from here though, but I still see that as viable for a financial. Looks strong. Boeing, nothing there. BK, overbought. Just waiting to see what comes next. BLDR. I'm gonna watch the industrials. I'm gonna watch the industrials. If they can make a higher low, I'm a little bit more inclined. I don't like that they just made a lower high. This thing could be a little overextended and may need to revert back towards like 150 towards the 50-day moving average. BLK, nothing there. BX, BX, I had been thinking about, but at this point, I now see that as a sell off more than a consolidation. It's now in what would be consolidative mode and needs to go through the breakout pattern in order to be considered. Citigroup still looks good, viable on the list. Caterpillar, no, that's you can see what's happening. It made a lower high. Now what? Now it's made a lower low. I think that's what we're going to see. Not that these are going to turn bearish, but that they maybe are regressing back towards the 50. So great. Let them do what they're going to do and wait until better signals show up. If we lose one of the five, our market posture will drop by a quarter of a point, but only a quarter. It's not that big of a deal. Capital One, I'd say still viable. COP, nothing there. Costco, overbought, but not setting up yet. If you're in it, you're taking profits. You're managing your trade. CrowdStrike, beautiful setup. Just had a beautiful trade on this. And now what? We're looking to do it again. Wait for the consolidation and then do it again. CSX, nothing there. DAL. Delta is Delta's down, needs to show better signs. DHI, put it on the list. Home builders look pretty good. Put it on the list. DIA, it's holding up. Elan, Elanco Animal Health on the list. Fastenal, no. Coming up to earnings, it's still at the tail end of its last one. Fold. I don't know about this. I put this on, but this looks like it's already in a pretty heavy retracement. I'm going to take this off. It was short-lived. I don't like the way it looks. That's just personal. GE. I'm not going to trade it, but I am going to put it on the list because it looks like it's setting up. You don't have a lot of time before earnings. Gold, yeah, kind of failing to bounce. Google, already getting ready for the next trade. Love it. Goldman Sachs. Goldman's holding up. That's a possibility for financials. Home Depot, overextended. Just finished. Waiting for the next setup to begin. IBM. Looks like it's finishing. And maybe if you're still in that one, you're looking to take some profits. ICE. I don't know. Failed to launch last time. It's right at the support level. I'd want to see what that one's doing. Intel's kind of the same thing. IWM, you can see really testing below that 50. We'll see if it can hold up. JP Morgan, interesting, but doesn't look tradable yet. Meta, beautiful. Right? Meta is setting up. Coming into the next trade. Love it. Microsoft coming into the next trade. If you didn't trade the last one like me, you're ready for the next one to come. Netflix on the list. So like I said, as you've watched, on Monday, we had like 6 stocks on the list of what we're watching. And then it grew to 9. And now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I'm at 15. 15. You know, that should be the evidence, part of the confirmation that's what we're seeing. Nvidia, not quite yet. Hopefully you've locked in gains. Bakar, I don't like that one. Failed to launch. Now it's kind of meandering sideways. PNC, that's a maybe, but you've got earnings. So actually I'm a no there. The Qs looks okay, just a small pullback. RCL, kind of funky. RXRX, like it. Put it on the list. This is This is a new one out of the healthcare. SMCI, great one. Looking for the next one. Pulling back. Snap. I don't like that it didn't get to a new high. It's kind of turning a little sideways, so a little more cautious there. SPY. The SPY is holding up. Let's see the opening range. So you can see we dropped, we're up, we're down, trying to figure out if this thing's going to stabilize today or not. UNP. I don't know. I don't know. You don't have a lot of time. You can see it's just kind of meandering down. I'm probably going to be a pass on this one at this point. The VIX is spiking up today. That's problematic for us, right? That is going to cause our score to drop. We talked about this wasn't a higher low, but it was the same low. And that certainly gave some caution. Now, here's the thing is this is spiked. We're a little concerned. It's still at 15. It's still at 15, but it does seem like it's kind of going into a little bit of this expanding, this broadening. We'll see what happens. We'll see what happens. But yeah, this is something that we have to take into consideration in what we're doing. This will cause us to ease our perspective on the market a little bit. So if we lose a quarter of a point from the VIX, if we lose a quarter of a point from major market, well, you know, that's, where would that put us? We're at 5.25 now. Hedge is doing well, Bob said. Love it. Love it. 5.25. Yeah, a little bit more. If you're in cash, you're fine with this. If you're in cash and you're, maintaining something to the downside, even better still, right? Even better still. Okay. Did I finish the watch list? I don't think I did. Let's get back to that. Walmart. Overextended, waiting for a pullback, but I'm willing to trade it when it happens. XBI on the list. Yeah, the VIX is up a little bit today. It's still at 15, right? Never let anything below 18 is just not ever that bad. So is it showing some escalation that concerns us? Yes. Is it like, oh, this guy is falling? No. XBI still looks tradable, still setting up. XLB materials down. That's okay. We're okay with materials being down. Communication services looks like a setup and looks bullish still. We know it's important for communication services to lead. Energy down. That's okay. We're not interested in energy being up. That helps to ensure that we don't see little flare-ups in inflation that spook the Fed. Financials holding up. Holding up, looks okay, right? Still looks like a nice uptrend. Industrials, a little more concerning. There's that, like I said, we had the lower highs. Now all of a sudden we're getting these lower lows, getting closer to the 50. So a little bit of a correction maybe going on in industrials. What does it tell us? It's really, for me, just that it was overblown. It moved very quickly here, right? We know that this tends to be unsustainable for long periods of time. When we score that would be scored like, I mean, that's just that's unsustainable to me. What's more sustainable would be something like this for industrials, right? And so that's the question: are we going to move into something? Is it going to decelerate without reversing, right? That's what I'm looking for, is that, okay, it just got a little bit overblown. and now we're seeing a correction. But I'm not necessarily looking for a reversal yet. It is slowing down, and we're gonna score it. We're gonna say, hey, if we don't have all 5 sectors moving this way, if this one's falling out of favor, we're gonna ease our score a little bit, and that would drop another quarter of a point. Still overall, a 4.75 is very bullish. We don't want to all of a sudden be used to 6.25, like that's our market. Yeah, we would love it. The longer, the more it stays in this area of strength, the better. But yeah, what we have to do is see what is this January sideways going to do. From a cyclical standpoint, February, March, and April are historically 3 of the strongest months. So the one thing we're not going to do is be like, oh, woe is us, this market's turning around. We're going to say, all right, let's think about this as what it is, a brief consolidative period that could very easily be followed by a strong 3 months. You know how much damage we can do if we get a 3-month bull run on the market. We cannot miss any of it. We've got to be ready for it. So that's still what I'm looking for, period. There's nothing that we've seen yet that has me thinking, oh, this may not. Nah, we look poised for a rally. Is it a less accommodative Fed, but still accommodative? Great. Still, we have strong market fundamentals, economic fundamentals, etc. Okay, so a little bit of less, not weakness, but less strength. Fine. Technology looks fine. It didn't quite make it, but it got all of it back. As long as this thing makes a higher low, I like it. Staples, nice and steady, which is what we want from our defensive sectors. We don't, if we see a big spike and all of a sudden the trend accelerates on staples or utilities, we're a little more concerned. This one's just nice, steady. This one's actually going a little more sideways, which is interesting. Because on our sector rotation, there actually was a brief period of time where we're like, you know what? Looks like utilities are gaining in strength. Well, it no longer looks like that. So the lack of defensive signals from other areas is what has me saying, yeah, we have to score our market down because we empirically look at these markers and we assess them. And so when we see things like a little bit of an escalation on the VIX, we drop the score a little. Our score would still be a 1. That's still bullish. It's just a little less bullish. This doesn't have me, any of this decline, none of it has me thinking, you know what, I don't know if I'm going to be putting on new bullish trades. I'm absolutely going to be putting on new bullish trades as long as the signals come, which is what? Well, we've got 1520. All we're waiting for is higher lows with confirmed price. We're still waiting for stochastics to turn and price to give us the right confirmation. And if we get it, we trade. Okay. There it is. Follow the rules, follow the system. Remember that this week we are working on bam. We are working on trading systems. So what I just described there was a bounce trade system. So what are you looking for? You're looking to have a set of rules for a bounce. We are now in entry mode, which would be what? A setup and a trigger. We have setups forming, but we're waiting for triggers. When we get our triggers, we will set our stop and we will set a target, and that will give us our reward to risk ratio. We will think about our trade management tactics, our methodologies and our tactics for buying and or for scaling out. Those are the rules you're working on this week. What might be helpful for those rules? Understanding how our selling strategies, our trade management, and our tactics can change based on where we are in the context of a trade, meaning what stage is that trade in? And you might be thinking, stages of a trade. I don't know about the stages of a trade, Scott. Well, guess what? You're in luck. Because tomorrow night, 8:30 p.m., we're going to be doing a trading foundations session specifically on the 4 stages of a trade. and how our thought process and therefore our trade management perspective will change, whether we're early stage 3, late stage 3, have we moved to stage 4? Are we still in stage 2? I know you're probably like, this sounds fascinating, Scott. It is fascinating, which is why I want you to join me tomorrow night for the Trading Foundations. You like that segue and plug? It's exciting. I hope you can make it. Let's get this in place, because that's going to wrap up risk management. We're wrapping up risk management. So you're going to be poised to move right into section 4. And by the end of January, we'll have our first pass, or we'll have our first half of the trading plan accounted for. All right. Questions, comments, concerns, let me know. Patience, that's the key. Don't force trades. Right now, we're waiting for our pitch, so make sure you know exactly what that pitch looks like. If you're managing existing things, make sure you have a very specific set of criterion that you're using for managing those trades. And yeah, everything still looks fine. Certainly a bit of concern. We'll see if we get a signal this week, or if it just kind of meanders a little bit. Sometimes it meanders into the last week of January, which will be next week. So we'll see. I'm optimistic. It's good to see everybody. Any questions? It's quiet. I'm a little concerned. It's quiet out there. How's everyone feeling? Are you and remember the follow-up question. When I say how are you feeling, the next question always is that how you wanted to feel? Right? So if you're like, oh, I'm anxious, I'm impatient, I'm frustrated, of course you don't want to feel that way. Okay, so let's stop and figure out why. And how do we get out of that? How do we right the ship? If you're not feeling how you want to feel, the chimp is out of his cage, and you never know when he's going to come just do damage. How do I want to feel? I want to feel in control. I'm in control. I'm not in control of the market. I'm in control of my behavior right now and waiting for the appropriate signals. I'll have my trades locked and loaded. I can do the work. You don't have to wait for the signal to start thinking. You can think, all right, the signal comes, here's my stop, here's my target. And if the next day it's a little lower, you say, if the signal comes, now here's my stop and here's my target. You can get the trades all set up, start building them in your Thinkorswim Analyze, get your slices ready with your stops and your targets, get the trade you're thinking about, get a couple contracts ready. Yeah, you can start finagling with numbers and playing with the numbers and getting ready to go. Is it best to use a hard stop on bullish trades still on? I like hard stops as long as I'm not facing a gap. Like if I had a stop this morning and it was going to gap into my stop, I'd take it off. Other than that, that's my preference, is to kind of be like, all right, after the opening range is established and it starts to move, you might say, oh, hey, you know what? If this thing all of a sudden breaks below this opening range low, I'm done here. And you put that stop in, and it rides the rest of the day. And then at the end of the day, you decide, do I want to take it off and reevaluate tomorrow? That's a great strategy, I think, for managing anything where it's a trade that's still remaining. All right. Well, listen, everybody, it's great to see you. We're in a fine place here, right? We're in a great place. We're just waiting. Signals should be setting up. Ready to knock them down. I will see you tomorrow night. I will see you again Wednesday. Good chance that we're discussing trade signals. Maybe it pushes to next week. That would fit more with the cyclical. Be safe if you have nasty weather. Shouldn't be too bad to shovel today. Looks like it's only a couple inches. And as always, happy trading.